is Anthony Lindsay, and every first time buyer question will be answered in the next 15 minutes or less. Every home purchase is unique, but 90% of the first time buyer questions are all the same. Today, I'm going to be covering off some of those questions, and I will also have a very special guest by the name of Hope. Hope is someone that I met a while ago. I think I met Hope through FSB or one of these membership groups. Hope is an experienced utility warehouse partner with a nationwide client base. She's committed to helping individuals and families reduce their household expenses by showing them additional ways of earning money beyond her professional achievements. Guess what? Hope is the proud grandmother of 10, bringing warmth and dedication and a wealth of real life insight to everything that she does. As I said, like most of the questions that first time buyers ask are the same thing. So I'm going to run through them very quickly. My name is Anthony Lindsay, and don't forget your home may be repossessed if you do not keep up the repayments on your mortgage. So let's get into this. First question that a lot of people ask is, when is a good time to buy? Now, that's one of those questions that is very unique to each individual. So the right time to buy is when you're ready to buy. Don't look at the marketing of the news talking about interest rates being up or interest rates being down. Look at the economy in your pocket, and then you can decide if you're ready to buy. So as they say, don't wait to buy and wait, because historically house prices go up in the long term. You may have some ups and downs in the short term, but in the long term, house prices are going to go up. How much can I borrow? How is it calculated as far as a mortgage? I've come up with something called CID, C-I-D, which is credit, income, and deposit. So what a bank will do, they will look at your credit profile, not just your credit score, but your credit profile. What I mean by that, your score may be high, but you may have missed payments in the last 3, 6, 12 months, which means you may not qualify for some products. Then they're going to look at your income. As a rule, they're going to multiply your income, so the amount that you make, by either 4.25, 4.5. It's going to depend on the type of job that you have and some other factors. So they're going to multiply your salary times a number. Let's keep the numbers easy and say you're on £25,000 a year, and they multiply it by 4. Then that would give you a mortgage amount of $100,000. So that's the amount of the mortgage you qualify for. But then let's just say you had £100,000 sitting around somewhere. You would take the amount of the mortgage you can get, which is $100,000, and add the deposit that you have, which is $100,000. So that means you could actually purchase a property for $200,000, because the $100,000 you're paying down would be deducted from the house price, which would leave the mortgage amount of $100,000. That leads me into loan to valuation. That's something that people ask about a lot. Loan to valuation, or LTV. Loan to valuation is the amount that the bank is lending you versus the amount that the house costs. So again, let's keep the numbers easy. If the house is valued at $100,000, let's just say, and their bank is lending you $75,000 because you paid down $25,000, that would be a 75% loan to valuation, because the house was valued at $100,000. You paid down a 25% deposit, which would be $25,000. That means the mortgage that the bank is giving you is just £75,000. How much do I need for a deposit? This is one of those things that gets bantied around a lot. People talking about a 5% deposit, a 10% deposit, a 15% deposit. Now, a lot of lenders, the top amount that they will lend loan to valuation wise is 95%. There are some mortgages on the market that go above 95%, but they're few and far between, and you'd probably have to have a really strong profile to qualify for a mortgage above 95%. I would say if you're one of those people that can afford to, you'd want to get at least a 10% deposit because that's going to open you up to more lenders, because not every single lender is going to do a 95% mortgage. So 10% down is going to give you a 90% mortgage, and that's going to open you up to more lenders. Can you borrow the money for the deposit? I get asked this question all the time. So you don't have enough money for your deposit. You're wondering, can you borrow money from a bank to make the deposit for your home? In theory, you can, but remember, if you're borrowing money, then you have to pay that back. They're going to deduct those monthly payments from your affordability. So if you're paying a loan of £10,000 back and you're paying £250 a month, they're going to take £250 out of your disposable income because now you have to pay that money back. So ideally, you want to save money for your deposit. That way, that money is in your savings account. You can demonstrate that you have that money. But you may be one of those lucky people who someone's going to gift them some money. It may be a parent, it may be a rich uncle. Anyone can gift you money. Some lenders will not allow the deposit to be 100% gifted. They want to see that the individual has some skin in the game. Some lenders will only accept gifted deposits from immediate family members. And remember, it has to be a gifted deposit. If it's a loan, it's a loan. If it's gifted, that means you don't need to pay it back. You will need to provide a gift letter. That will be part of the things that the solicitor will ask you to provide when you're demonstrating how much of a deposit you have for your new home. What are the costs involved in buying a home? So yes, you have the deposit, but don't forget, if you come to me, you're going to be paying a broker fee. You can go directly to your bank and you may not pay a broker fee, but you will find that the service that you get from brokers is going to be a higher standard. Plus, you're going to get more choice by going to a broker because brokers work with multiple lenders. When you go directly to your bank, they're only able to talk to you about their products. You'll also have solicitor fees. And do not cut corners on solicitors' fees. If you are looking for the cheapest solicitor, it may end up costing you more money. Why? Because a loan, a mortgage, is only as quick as the slowest person. So you don't want a solicitor who is overloaded, or one of these solicitors that is in a panel and you have to do everything through web chat. You want a solicitor that you can speak to, someone that's going to be responsive. Because think about it this way. If you're renting and you have the cheapest solicitor possible, but you're renting, and because of that solicitor, it prolongs the deal by an additional month or 6 weeks, that's an additional month's worth of rent that you're going to pay. That's real money. So you may have found a cheaper solicitor, but you've ended up paying an additional month in rent. The solicitor will also be the person that protects you from things that could go wrong during the contract stage. They'll help you with the searches, etc. You'll also, depending on the cost of the home, be liable for stamp duty. If it's a second home, you will pay that additional premium for the stamp duty. So don't think about just the deposit. There are other fees that are involved. And if you're living at home right now, when Hope gets on the call a little bit later, she'll be telling you that living at home might be one of the best things you can do, because you could switch a light on and go in the other room and leave the light on. But when you're living by yourself, you're going to have those additional costs of running the household. A question that people ask me, why is my interest rate so high? My first answer to that is, compared to what? I was speaking to a client a few weeks ago and they were like, oh, I took my mortgage out 5 years ago and my interest rate started with a 2. I'm like, that's great. The interest rates aren't starting with 2s right now. So when you're asking, why is my interest rate so high? What are you comparing it to? Are you comparing it to someone else in another situation? Are you comparing it to what interest rates were 5 years ago? If you are working with a broker, or even if you go to the bank, they're going to find the cheapest product that you qualify for. So the interest rate that you get based on your profile will be different than what another person might get for their interest rate. Things that will impact your interest rate is your credit rating, the amount of the deposit you're paying down, your visa status. There's lots of things that will impact that. And remember, as a broker, I am regulated by the FCA. The FCA requires me to get my clients the cheapest rate that they qualify for over the shortest term. Being a broker is a relationship business, so there's no benefit in me getting you a higher rate than you actually qualify for. The best thing I can do is provide a great service that you'll be excited to refer people to me. So if you have a non-UK passport, that might impact your interest rate. If you've had to go to a specialist lender because maybe you've had some bumps in the past and you are unable to go to one of the high street banks, that will impact your interest rate. Freehold versus leasehold. Now, I grew up in the States, as you can probably hear from my accent, and it took me a while to understand this whole thing about freehold and leasehold. Simply put, usually most houses are going to be freehold, most apartments are going to be leasehold. There's also something called share of leasehold, which is still a leasehold. Keep in mind that if you do a leasehold purchase, that solicitors usually will charge a little bit more for the conveyancing. So it's a little bit more for leasehold because there's a little bit more involved. But what's the difference? A leasehold, it means that essentially the land that the property is on, you don't own. Somebody else owns that freehold. What you want to watch out for when you're purchasing a property is what's called a short lease. So you want to, as a rule of thumb, you want to try to find a property that has a leasehold of more than 100 years. The bigger the number, the better, but you don't want to go under 100 because some lenders will have restrictions on how much they will lend or the loan to valuation. And if it's a short lease, you might find that no lenders will lend on that property. There are some changes going through Parliament at the moment around leaseholds, but you'll have to wait and see. And maybe by the time you watch this video, things will have changed. But for now, try to avoid leaseholds that are less than 100 years. If you're buying a house, it's probably going to be a freehold. Should I buy an auction property? Now, people get excited when they see these beautiful properties being sold for hundreds of thousands less than you would think that it should cost. Well, there's a reason. My first caution to anybody who is considering buying an auction property is if you're not an experienced investor with a team of builders and know what you're doing, do not buy an auction property as a residential property. Now, if it's an investment property, that's something different. But if you're just trying to get a house on the cheap, ask yourself, why is it so cheap? It's probably being auctioned because it couldn't be sold. Some things to keep in mind. Will you be able to get a mortgage on that property? When you use the modern method of auction, it means once your bid is accepted, you have to purchase that property within 30 days, which means if you're getting a mortgage because you're not buying it cash, you need to find a lender that will lend on that property. And it's probably being auctioned because it's not mortgageable or there's some issue around it. So I would avoid auction properties at all costs. Your deposit is at risk because once your bid is accepted, that deposit that you pay down is non-refundable and you will have to get independent legal advice. There's lots of legal stuff that you'll have to go through in order to even just enter into the process. But no, you should not buy an auction property if you're trying to buy a property for your home, for your family to move into. What are the different types of mortgages? So you hear people talk about fixed rates, variable rates, tracker rates. Simply put, a fixed rate is what most people go for when they're getting a residential mortgage. A fixed rate is going to give you a fixed payment every month for a set period of time. The most common times are 2 years, 3 years, 5 years, and there's larger or longer terms than that. But most people tend to go for 2 or for 5. So you'll go for a 2-year if you feel that within the short term that interest rates are going to be going down. In that case, what you would end up doing is going for a short term. If you're worried that interest rates are going to be going up, then you'd fix for a longer term. That way it protects you against interest rates going up. And you have the peace of mind of knowing how much your mortgage payment is each month for that fixed term period. A variable rate is just that. It will vary. So it might track the Bank of England base rate, which means if interest rates go down, you may get a notification from your bank telling you your mortgage payment is going down in the next 30 or 60 days. Conversely, you might get a letter from your lender saying that interest rates are going up. So if you want stability, you're probably going to go for a fixed rate and not a variable or a tracker. And then there's also two payment methods. Either you're going to do a repayment mortgage or an interest-only mortgage. A repayment mortgage simply means that in the term, that's the big number in the mortgage, the 20, 30, 35-year period, at the end of that period, you will have paid off your mortgage completely. So each month, you're paying some of the interest and some of the capital. Over that term, that amount that you owe the bank is going to go down. At the end of the term, it will be paid off. Now, most people, because they will take out a fixed rate mortgage for a period of time, 2, 3, 5 years, whatever, at the end of that time, they'll do something called remortgaging, which is essentially when you either stay with the same lender or go to a new lender and you renegotiate the terms. So that's remortgaging. But if you have a repayment mortgage, it means that you will pay off your full mortgage balance by the end of the term. If you have an interest-only mortgage, that means every month that you're paying, you're only paying interest. So if you got a mortgage for £200,000, every month that you pay, your £200,000 outstanding will remain the same. At the end of the term, the bank will require you to pay back that full amount. Most people don't take out residential mortgages as interest only. They would take it out as repayment. Usually an interest only mortgage would be taken out if somebody is doing a buy to let. Sometimes people take it out because they can't afford the repayment mortgage. It can be risky, especially if you don't have a repayment vehicle at the end of that term. I have been talking to a lot of people recently that are a little bit older and are in a bit of a bind because they took out interest-only mortgages. They're now 57, 58. The bank is saying, well, you now owe me £250,000. They can't get a remortgage and they're a little bit stuck. So just be really careful if you're doing an interest-only mortgage unless it is a buy-to-let property. Timelines to buy a new home, it takes longer than you think. 4 to 6 months. 50% of all mortgages do not go through. So keep that in mind. It's not as easy as it seems on television. If you're doing a remortgage, it's 7 to 10 weeks. A product transfer, which would be you're currently with a particular bank, you're just switching to a different product with that same lender, that's 1 to 2 weeks. Now, additional expenses. As I was saying, and Hope will elaborate on this, if you're living at home, you're probably not thinking about the additional expenses that are involved in owning your own home. So you hear a lot of people like, oh, I'd rather be paying a mortgage than putting some money in someone else's pocket by paying rent. Keep in mind, when you pay rent, if the roof falls in, if the boiler breaks, if something goes wrong in that house, the landlord is responsible for that. When you own the property, you're responsible for everything. So when you purchase the property, you're going to have the cost of moving, you're going to have solicitor's fees. If you're buying a house, you're required by law to have building insurance. You're going to have moving costs and running costs and things that you never expected because you bought the house and the seller didn't tell you that there was a hole in the roof or that the boiler was about to go out. So always assess if you're going to be able to afford this new place. You're going to need protection. There's going to be other things that you need. But we're going to talk a little bit about running costs. So we're going to shortly be bringing in Hope, and Hope will be giving us some information, some hints, and some tips on how to save money on your utilities. Hope, can you hear me?
Yes, I can.
Okay, so as I said, you are a grandmother of 10. You are a utilities warehouse guru, and you are here to tell people how they can save money on their utilities and also put some extra cash in their pocket. So, welcome.
Thank you.
Oh,
So,
okay.
hello.
So when
Yes.
we're talking about utilities, what are some of the things that you're seeing recently as far as people's bills and maybe some things that are going on in the environment?
Well, what some of the things we're seeing is that people are paying way, way too much for their energy. They don't check, they don't have a look around, they don't shop around, particularly more older people. They just accept what their current supplier tells them and then really, really struggle. And some people are also paying for services that they don't use anymore. So UW offers a variety of services, including energy. So, for example, broadband services. And I've come across many, many people who've got broadband services linked to TVs, services that they don't need and don't use because they've got Freeview TV and all of those same services are available to them free, but they're paying for it through their broadband supplier.
So why would someone do that? Why would someone be spending more money than they have to?
Because they don't realize that that's what they're doing. They think because there's this sense of loyalty sometimes, so people will just stay with that company because they've been with them for a long time. And other people just don't realize that they're paying that amount. They're just paying it automatically without looking. And just like you would each year when you get your car insurance quote, you'll shop around and have a look and see if there's something cheaper. Really, you should be doing that with your other services such as broadband and energy.
Do you find that people have started looking into this more now with the cost of living crisis, or are you finding that people are just blindly being loyal to their current provider?
It's a mixture. So there is more awareness. So some people are looking into it more, but some people are talking about it more, but still doing exactly the same thing, staying with the provider, not shopping around. And if they can just about meet the payments, despite the fact that they're struggling, they'll just continue doing so.
So, what got you into supporting people with saving money? How did you become a UW provider or
Or
for
partner. We're
partner?
called partners. So it's a bit of a story. I used to work for a trade union. I was there for over 30 years. And it was a very busy job. And then I got ill. I got breast cancer. I was off work for 18 months. And when you have an illness like that, it really focuses the mind.
Yeah.
So when I went back to work, I decided that I didn't want to do that anymore. I wanted to do something more flexible, take things a bit more easy. So I drifted around a bit. I did a bit of training, delivering some training in the NHS. And after the pandemic, I got bored with that as well. So I was then introduced to UW by a friend who I'd met while I was doing some volunteering with the Samaritans. And I realized then that I wanted to do this. It was flexible. I could do it how and when I wanted to. I got great training. I found new friends and I'm helping people. So for me, that was a win win.
From the first time that I met you, that's one of the things that I think resonated with me. That you genuinely want to help people, and helping people
Yeah.
save money is life changing because that
Yeah.
impacts so many other parts of their life. So, do you save people a little bit of money? Do you save people a lot of money? And how does it work? How would someone go to the
Uh,
next stage with that?
Okay, so you can save people just a small amount of money, maybe 10, £20 a month. But I've equally saved people £1,500 a year in savings, reducing their bill. Recently saved someone £65 a month. Now,
Wow.
all of those figures, they are, they're money that you can be using for other things. Particularly if you're old age pensioner, where pensions are really tough at the moment. People with small children, they are struggling, and having a few quid extra in their pocket is really worthwhile. So what I do is I generally generate a quote for people, showing them what we offer, and they compare it against what they're paying. And if we are offering them something cheaper, which invariably we are, we simply switch them.
Okay, and how long does the process take?
It generally takes about 4 weeks in total, 4 to 6 weeks, depending if they've got broadband and some work needs to be carried out to install that broadband. But the energy itself takes just a week to 10 days.
Okay,
And
so
UW takes it all up. So they inform any existing suppliers, they take the whole service over, give you a timeline, and just sort it out for you.
So when you say they take the whole service over, so once you have helped people save that money each month, if they have a question or if they have a customer service issue, do they come to you or do they go directly to the provider?
They can do both. One of the things we say is that, you've got a personal advisor in me because I was the one who signed you up. But I can guide them, or they can go straight to customer service. We've got award-winning customer service that they can go to, based here in the UK, in North London. They're able to pick up the phone and easily speak to someone, but equally they can speak to me, and I can help them as well.
Okay. So in some ways feel that the cost of living crisis was one of the best things that could happen to some people because as you said, it's so easy when things are going well for you. You sign up for things, you set up the direct debit, your money goes into your bank account from your salary, money comes out and there's money left over. It's not until you reach a point where there's not enough money in the bank account to meet those things that you start looking as a bank manager. And I tell this story all the time. There were countless times where people would come into the branch and speak to one of my banking advisors and say, what is this particular thing on my bank statement?
Yeah,
'Cause people don't look at those things. And then, they'd sit down with the banking advisor and you'd see that they've been paying this thing for 6 months, 8 months, 2 years, and never noticed until things got a little bit tight for them. And
yeah.
with our relationship and what I like to be able to do with my clients, I'm helping people find a home, find the best mortgage, move into that home, and then introduce them to you that you can take that piece of the journey off their hands. You can help them get the right broadband, get the right utilities, etc. So, what would you say are the top two objections that people usually give you when you're introducing them to the idea of using UW?
I would say one of the main things they say is they've never heard of UW, so they don't want to go with them, despite the fact that we're showing them clearly that we can save the money. They say, I was with British Gas or another company, and I know them. They advertise all the time. UW doesn't advertise anywhere. We are a word of mouth company. We sell our services through people like myself. The second thing they'll say is, "Oh, I knew someone who was with UW 5, 10 years ago, and they weren't happy. So I'm not going to go with them." Again, despite the fact that everyone's usage on their things are different,
Yeah.
and it was 5 or 10 years ago, and things have changed, and we show that we can save them money.
So, if somebody wanted to get in contact with you, how would they do that?
They could do that in a number of ways. They can call me on my mobile, which I think you have
Yeah,
on
I'll
your
share the
screen somewhere.
information in the description.
Yeah, or they can contact me through the web address again, which you have. And once they've put an inquiry in, I will contact them and help them.
Okay. So now you've talked a little bit about how you can help people save money on their utility bills by switching them to UW. You've also said that one of the things or one of the objections that you might hear is brand awareness because they're not familiar with
Yeah,
it, or some person had a bad experience in the past. It's similar to kind of the process that I go through with people. So I'm doing a mortgage for someone. the very first part of doing a mortgage for someone is I have to do an affordability assessment. During
Yeah.
that, we look at the things that they're paying out on. And as you said, quite often people are paying like, really high utilities or really high broadband or have duplicates, right?
Yeah.
So throughout the
Yes.
process, I'll help them work through their bank statement, reduce their outgoings. As part of my job, I have a fiduciary requirement, an obligation to talk to people about protection. And then all of a sudden, these people that I've just saved maybe £120 a month, got them the mortgage that they want and they need. And now we're talking about protecting that mortgage from something
Yeah.
that is inevitable. We're all going to die at some point. Statistically, depending on what statistics you look at, 1 in 3 or 1 in 4 people are going to suffer from cancer. You've said that that was something
Yes.
that you've experienced. And then you talk to people and they come up with these objections. But what I found is most of the time, it's not a true objection. So if someone is telling you, well, some fictitious person 5, 10 years ago had a bad
Mm.
experience, therefore, I'm not even going to have the conversation to see how much money I can save today. To me, that's just more of an excuse than it is a
Yeah.
reason. So, what are some of the
Yeah.
things that you would say to someone who is clearly just kind of, playing the game and saying, "Oh, I've never heard of UW," or someone else had a bad experience. What are some things that you would say to, I guess, convince them that this is something they should consider?
Well, what I do, Anthony, is I take them through what UW can offer them and their family. So we have great value energy, fixed rate or variable rate, similar to what you explained on the mortgage. We have offer great value broadband services. We have mobile SIMs that are really great value. We offer home insurance and boiler cover. We offer all of these things in one single bill each month. So again, a great way to budget, a great way to know what's coming out of your pocket each month very easily. We also have a cashback card that you can use in to pay for a variety of things. We have cashback partners, and you can get up to 10% cashback on goods that you purchase, and that reduces comes off of your bill each month. And we also have a referral scheme. So if you refer anyone you know, friends or family, and they take our services, you're paid some money as well. So all of those things weighed up against, whoever you're with now, should make you see that it makes sense to take a look at us. You may still decide not to go with us, but these are things that we're offering you.
Yeah, and it sounds like it's worth the conversation. And this is the thing,
Definitely.
to just blindly just keep pay your bills, paying a bill or
Yeah,
being loyal to a company that's not loyal to you. Um,
yeah,
I just think that doesn't make any sense. I always advise people to at least once a year pull their credit report, go through their credit report, go through their direct debits. One of the things that I've launched is the Mortgage Ready Challenge. And in the Mortgage Ready Challenge, what I do is I work through people's credit, their income, and their deposit. So that's SID, like I was talking about earlier. But as we're doing that, we go through people's bank accounts and we help them identify things that maybe they're duplicating, things that
yeah.
maybe they're paying for and they didn't realize that they're paying for, or things that they could just contact the company and say, "Look, I'm leaving," and see if they
Mm,
can get a better rate. And as part of that service and part of that program, you are one of the people that I'm integrating into the process that people can
yeah.
review what they're paying out and hopefully save some money. Now, the other part of what you were saying is there a way that people can become UW? Did you call them partners?
Partners, yes.
UW partners. How does that work?
That works by if you can join us as a partner, you pay £10 to do so, and you'll get training, support, and mentoring. And what you do is you do exactly what I do, duplicate what I do. So you recommend our services to friends, family, colleagues, whoever. And when they take our service, if they take three or more of our services and they're a homeowner, you get paid £250. Now you can do that as many times as you want, or as little as you want. It's just a way for you to earn extra money. But we've also just launched a new role, what we call a connector. So you can sign up without paying any money at all and share that link with your friends, family, colleagues, whoever. And if they take our services, you'll be paid up to £150. So you share that commission. That's all you get. But if you're a partner, you not only get the £250 upfront payment, but you also get residual income, which means that you get a small percentage of the bill, each of your customers that you've gathered. You get access to our incentives launches as well. Family.
Okay, it seems like we're having a little bit of a challenge with the connection. Are you still there?
I am.
Okay.
Can you,
So
can
yeah,
you
I
hear
can
me?
hear you. So one people might wonder. So we have these property talks on the first and second Wednesday of each month. So someone might be saying, well, why on the property talk are we talking about UW? It's because if you're going to be buying a property and you need a mortgage, one of the key elements is the income. So I want to not only reduce what you're paying out, but show you ways of increasing your income that you can build up a better
Yeah.
deposit, that you can get a nicer home for you and your family. So we'll have Hope's information in the description. Now we're going to switch over to just walking you through the different phases of getting a mortgage, because I know that I talk to a lot of people and people might even have a mortgage or may have had a couple of mortgages, but their mortgage broker or the bank did not explain the process. And I want to make sure that not only first time buyers, but everybody understands the mortgage process, that they can make informed choices. So the first step in getting a mortgage is going to be financial assessment. So that's when you speak to either a broker, you might speak directly to your bank. But as I said, I would recommend that you go to a broker, because a broker is going to give you more choice. So that's when they're going to look at your pay slips, they're going to look at your outgoings, they're going to do an affordability assessment to see how much of a mortgage you can get. Once they do that, they're going to get you something called an agreement in principle. Now, if you've been looking for a home, you will know that estate agents, that's one of the first things that they ask you. Do you have an agreement in principle? Now, an agreement in principle is super important, and it's kind of not important. What do I mean by that? Well, an agreement in principle is just that. It's an agreement in principle. It isn't usually validated by the lender. So I could go to, the Halifax website right now and say that Hope's income is 500,000 a month and she has a 90,000 pound balance, and it's going to give me an affordability assessment based on that. It's going to produce an AIP, or agreement in principle. Sometimes it's called a decision in principle. Sometimes it's called a mortgage in principle. It's going to do it based on the figures that I put in. I don't have to prove the figures. So at my firm, at Charles Crown, what we do, we don't do an agreement in principle that will not convert into a mortgage offer. So we do all of the due diligence up front. Probably 7 out of every 10 clients that I work with come to me and say, oh, I went to a broker or I went to my bank and they gave me an agreement in principle, and I spent 2-3 months looking for a house, negotiated the price, and now they won't give me the mortgage. The reason why that is because 9 times out of 10, that bank or that broker did not do a full assessment, do the full due diligence to make sure that that agreement in principle would convert into a mortgage offer. And also, the other thing to keep in mind, the agreement in principle is assessing you as an individual or you as a couple. So the bank might say, yes, we will lend Hope £1,000,000, right? But the property she finds, they may not want to lend on that property. This is why it's so important that if your broker does offer the service, I know I do offer it. If your broker offers the service of helping you negotiate, let your broker do it. Last week or the week before, I saved a client £2,500 just by them letting me support them with the negotiation. I do this every day. All right. You are not going to be able to negotiate with an estate agent as well as I can, because the estate agent works for who? The estate agent works for the seller. The estate agent's job is to get as much money out of the buyer as possible, which is why it's important, if your broker does offer the service of negotiation, let them do it. Let me do it. I will save you money. And that means when the estate agent is contacting you and you're at work, you don't have to sneak off into a room, or, you have someone between 9 and 5 negotiating that deal for you. It will save you money, and also it will give us an opportunity to find out if there might be something about the property that would make it unmortgageable, or if it's a short lease, things that you wouldn't know to ask. So first the financial assessment, then the agreement in principle, then the negotiation. Once the offer is accepted, then we would instruct a solicitor. From the very beginning, you should start looking for a solicitor. As I said, don't cut corners on the solicitor, but you should look for one very early on, because once things start moving, they start moving really fast. So once the offer is accepted, we'll get the solicitor involved, and then we'll complete what's called a full mortgage application. This is when the bank or the lender starts to ask for the information to validate the information that was put in at the agreement in principle stage. So they'll usually ask for 3 months pay slips, 3 months bank statements. They'll ask for proof of identification. They may ask for other things. If there's anyone above the age of 18 living in that property, that person will have to sign what's called a deed of consent. So this is the point where they start to gather all of the information to make the full mortgage offer. The full mortgage offer can take 1 week, 2 weeks. It shouldn't take more than 3 weeks for the underwriters to start doing that process. As part of that process, they're going to do a valuation. So the valuation is not a survey. The valuation is the bank assessing how much they think the property is worth. This is also why it's so important that you negotiate well, because the house that you're buying, you may have had an offer accepted for 400,000, but the bank might go out there and say, nope, we think it's worth 380. Then you're going to have a problem, because there's a 20,000 pound gap. So you're going to do the valuation. Some lenders charge for the valuation. Some products come with a free valuation. The bank will then come back and say, yes, we think it's worth what you're paying for it. Then what they'll be able to do is finish the underwriting and do the full mortgage offer. Once they've made the offer is usually good for about 6 months. So the bank is now saying, yes, we will lend Hope £5,000. Yes, we will lend her that money on that property. And for the next 6 months, this is the rate, and this is the payments that we're agreeing to. If you're working with a broker, this is a great tip. If you're working with a broker, if you're working with me, let's just say we get you the best rate available today. Then the Bank of England meets, and the Bank of England reduces rates, and that lender reduces rates on that product. It would have to be on that product. I will switch you to a lower rate. So if rates go up, you're protected. But if rates go down, part of my job is to switch you to that lower rate. Now, once the mortgage offer has been offered to the client, for the most part, it now switches over to your solicitor and the seller's solicitor. They communicate. I won't disappear if I'm your broker, but most of my job is done at that point, because I got you the mortgage offer. This is when the searches, the survey, if you choose to do a survey, a RIC survey. So that's when you can pay a company to go in and check out the property. I will caution you, they always find damp, unless it's a brand new home. They always find some level of damp. There's a lot of red on the report usually. Don't be too alarmed. But if you feel that you don't want to proceed with the purchase until you've done a survey, make sure you hire a RICS surveyor and get them to go in and look at the property. I put solicitor stuff here because this is when the solicitors do the searches and they communicate with each other, go through the contracts. Then there'll be an exchange date. Then there will be a completion date. That's when you get the keys. Remember, when you go to a mortgage broker, you're not looking for a mortgage, you're looking for a home. So ultimately, what you're trying to accomplish is that completion date. As I said, the process is only as fast as the slowest person. So don't just shop based on price. One of the things that I've learned in my 30 years of finance experience, when people are shopping for a product, they think about price. When they need to use the product, they think about service. So this is similar to what Hope and I were discussing. People have these loyalties to these providers, and maybe they think it's because they're the cheapest. But if something goes wrong, you want to know that you are going to get good customer service. So make sure you pick the right solicitor, make sure you pick the right broker. And once we get to that point where the offer is in place, I will have the conversation with you about your protection. So that's income protection, that would be critical illness protection, and life cover. Once we get towards the end of that process, I'm going to introduce you to Hope. That Hope can talk to you about the utilities, the broadband, and other things. Because we want to get you in that home, and we want to have you saving money and paying as little as possible for the best services. Now, I know that there's some people on the call. I don't see any questions in the chat, but I'm going to bring Hope back in, and I'm going to ask Hope, as far as working with brokers or working with other individuals, who do you find is the best source of people of introductions to you or referrals?
They do tend to be mortgage brokers, but also current customers, existing customers will refer their family and their friends. Very often, I will gather a customer and that person will say, "Look, can you take a look at my mum's bills? She's been paying X amount for a long time." But yeah, mortgage brokers, letting agents, and just really any and everyone who
Yeah.
pays bills will be interested and take up my services and then refer people they know as a result of their experience.
So I would encourage everybody watching this to reach out to Hope. Just go through the process of reviewing things. You don't have anything to
Mm,
lose by having the
that's right.
conversation. And 9 times out of 10, she's going to be able to save you money. So
Yeah,
if I'm doing a mortgage for you, you're going to be introduced to Hope anyway. And the referral thing is very important because what Hope does and what I do is very much about relationship. The best thing we can do is provide a great service because then those customers or those clients are going to refer other people, and it's based on relationship because they know, like, there's certain people that I don't do mortgages for, but they still appreciate the fact that I was honest with them, that I gave them the information that they needed, and they'll refer people to me just based on the fact that I've done a professional job. With you, once you start saving people money on their utilities, they're going to tell friends and they're going to tell family.
that's right. But just going back quickly, Andrew, to what you said about critical illness insurance, income protection insurance. I actually had that when I was ill. I had taken it out. I thought it was a bit expensive, but I went along with it. And 8 years into my mortgage, I became ill. And like many employers, I only got paid for a few months and then it went down to half pay and it would have gone to nothing. But instead, my critical illness insurance kicked in and it paid off my mortgage.
All right, so I'm going to pick up on that. That's not something we planned on talking about, but I'm so passionate about protection. I did 10 years of collections and pre litigation for HSBC, and I've seen people lose their houses. This is why
Mm,
when I talk to people about protection and they just have that knee jerk reaction of, oh, it's too expensive, I can't
yeah,
afford it. There's three key protections that we talk about as mortgage brokers. Point number one, we talk about life cover. Life cover is easy. We're all going to die. We're
yeah.
all going to die. Now, people say, oh, I have life cover already, or I have this, but you didn't have a £300,000 mortgage when you took those other things out. So, life
Mm,
cover is usually the least expensive, it's quick, it's straightforward. Income protection. You mentioned something that hopefully people will catch up will pick up on. Your employer will pay you for a period of time when you're sick.
Yeah.
For a period of time. There are very few employers that are going to pay you just indefinitely. So
Mm,
though once that sick pay ends, and it usually gradually decreases, how are you going to pay your mortgage? Income protection is there to pick up where that sick pay leaves off, that you can continue to pay your mortgage. But I'm going to major on the critical illness because, Hope, you brought out something that is, as I said, I'm very passionate about. I lost my grandfather to cancer. I lost my grandmother to cancer. I lost my father to cancer. And as I said, 1 in 3 or 1 in 4 people are going to experience in their lifetime. Critical illness cover will pay off your mortgage if you have the right one. And it's
yeah.
on diagnosis. So make sure you talk to your broker about critical illness because just having that load off your mind,
Mm,
it can help you focus on getting better. Critical
that's
illness,
right.
and listen, young people, because young people always say this, oh, I'm young, I go to the gym, I eat well, blah, 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 blah. Today is the cheapest your insurance will ever be. Today. Because as you get older, it becomes more expensive. If you
Yeah.
have a pre existing condition, it becomes more expensive. So definitely talk to your broker about it. Don't do the knee jerk thing of it's too expensive. My friend says it doesn't pay out and all the foolishness. I've done an affordability assessment. I know you can afford it. And more importantly, when people say they cannot afford the protection, then you can't afford the mortgage. Because if you
Yeah.
can't afford the protection when you are working, it then means if you're not working, you definitely cannot afford your mortgage. So let's just make sure that everybody has that serious conversation. We will put a package together for you based on your needs and where the gaps in your coverage are. We're not here to just push insurance on you. So we will have Hope's information in the description. And I appreciate everybody listening. There is one question. At what point in the process do I have to be really intense in looking for the right house? If do I give an offer or the broker can do that for me? So the broker, I offer a negotiation service, as I said. I do it from point one to offer being accepted. Keep in mind, 9 times out of 10, your first offer is going to be declined. If your first offer is accepted, then you've offered too high because it's a negotiation. All right. So 9 times out of 10, the estate agent or the seller is going to say, oh, well, we've had an offer a little bit higher. Can you go higher? That's their job. Let the broker do it for you. And I don't understand the first part, but I would say start looking for a house ASAP that you have a feel for how much the type of house you'd want to live in costs. That way, when you go to the broker and have the conversation with the broker, they can know what number they need to get you to. Now, it's math. So if your income or your outgoings don't support that number, then they just don't. But it's better to at least know what we're shooting at. Then I can give you a blueprint for how to get there. So each Wednesday, the first and second Wednesday of each month, we have these property talks. You can reach me. My information will be in the description. It's always good to be able to answer questions in a way that there's no agenda for me. Hopefully, you'll watch this and hopefully you will decide that you do want to work with me. But I'm giving information as an FCA qualified mortgage broker. You can validate the information by speaking to other people. I am here. I'm in a lot of WhatsApp groups, and I appreciate everybody that has watched, and we will catch you for the next episode. If you don't have a broker and you'd like to speak to someone, I'd love to talk to you. My name is Anthony Lindsay. My phone number will be in the description. And I've been in finance for over 30 years. I've done everything from wealth management to collection, so I know a thing or two. Can you hear me?
Yeah, I can hear you.
Okay, how do you think that went?
Yeah, I think it went okay. I hope I managed to cover everything I think I managed to cover everything I wanted to cover.
Okay. Well, I think it went well. I think it went well.
Yeah,
So,
it was great to get a question as well at
yeah.
the end. I was hoping someone would come up with a question so you could explain a bit more. And I thought your part was very, very good.
Well, so was
Really,
yours. I
really
mean,
informative.
you well, thank you. But I think there were several key things that you said in there. We got to speak about the objections, so that
Yeah,
will let people know. So that's what I'm saying. Like when I put your clip together to send to potential referrals, you've
yeah,
already handled that bit about those two key objections. So they're not going to be able to give you those objections. And if
yeah,
they watched
yes,
that and seen your response to those objections and they still talk to you, it's because they know that they want to talk to you.
yeah,
Yeah.
yeah. So that's really helpful.
All right. So I am going to wrap it up and then I will give you um I will give you I will drop you a line by next Monday, okay?
Yeah, that's great. Thank you, Anthony.
You're welcome. Take care.
Okay, take care. Bye bye.
Bye bye.